The U.S. equity market is at a pretty critical point here, both technically and structurally. In fact, what we saw the other day is I think it was from what I read, it was the third highest volume put buying spike in history, the third highest in the S&P 500 to the SPY. And the previous two times, from what I gathered here on Twitter, were actually ended up being bottoms for the S&P 500. And the NASDAQ 100 apparently had the largest spike in put buying the other day. So there is a lot of positioning out there that's getting a bit panicky, and it could cause a bounce. It hasn't happened yet, and there's always the risk of this being ignored, because remember, we have such a high concentration of people allocated to just a few stocks that even these spikes can be essentially ignored and go much higher when the algos really start toppling each other to get out of these stocks. So that could happen. It's not my base case right here, right now at these levels, but I just want to kind of give you both sides of what the risk is. But again, all else being equal, this is a high level of put buying that feels a bit panicky. Now, if you go to the charts, and we're just going to look at the QQQ, NASDAQ 100, and the SPY, S&P 500, we're at the simple 200-day moving average. The algos, like it or not, they follow this. There's a possibility, I'm going to say it's a decent possibility, they start buying here for a bounce, maybe a meaningful bounce. I wouldn't be surprised if this leads to, a 5, 6, 7% face ripper rally. But again, I stress, it hasn't happened yet. So we're still having down days. It hasn't happened yet. So this is premature, in my view, to get in on something like this for the S&P 500 as well. And this is actually a couple other points here on the S&P. First of all, the S&P is now at the absolute low end of its trading range that it's been in basically since September of last year. We've now broken below to where the market was when the Trump administration came in, and actually make the chart a bit larger. And that may be something that could lead for the politicians to kind of say, maybe it's time to kind of let the market bounce a little bit and come up with something that sounds really good on the tariff side. Or I don't know, but I'm just pondering here. But the point, and we're at the 200-day moving average. So there's a lot of levels here that are really interesting, and again, combined with the put spikes. So, but again, I stress it hasn't happened yet. We haven't had an update. We had no bullish reversal day, nothing. It's a bit premature. Maybe this happens today as I'm recording this. I'm recording this here today, Friday, March the 7th. But it's a potential thing. If it doesn't happen and the market just flushes lower, then we know that the algos are now in charge and are now starting to sell, and something bigger is underfoot. We do think the equity market has lower to go over the course of maybe the next 1 or 2 or 3 months still, but I think very near term there is a possibility of a bounce. So let's see if price action confirms this, because that's ultimately what we need to be seeing. So I hope it helps, and have a good day.